On to how markets in the region closed trading yesterday, starting off with the BRVM 10 index closed trading at 230.12 points, down 0.30%. Meanwhile, the BRVM composite lost 0.25% to close at 207.03 points. The total value traded on the day dropped to 231.8 million CFA francs. The currency for the region is trading at 598.34 to the CFA franc against the US dollar, putting its year-to-date change at a positive 0.18%. And in Ghana, the GSE Composite Index closed at 1,903.29 points, down about 0.25%, taking its year-to-date change to 58.64%, one of the best performing bourses on the African continent. The GSE Financial Stock Index closed at 1,638.23, down 0.37%. The year-to-date change for that index stands at 57.54%. Onto the currency front, the Ghana cedi is trading at 2.052 the greenback, putting its year-to-date change at a negative of 7.32%. We saw the Ghanaian cedi under pressure all through last week, but traders in the market say despite that, they still have a positive outlook for the currency going forward. And in Nigeria, the equities market started off on a bearish note yesterday, kicking off activities for the week with a lull. There's still a lackluster attitude as well at the market as investors and, of course, the market in general await more earnings today, especially from key banks, notably Guaranty Trust Bank. Investors are eagerly awaiting Guaranty Trust Bank to announce its interim dividend. Now, with all the share index dropping, we saw the share index dropping 0.62% to 38,090.74 points. And some of the losers in the banking space were First Bank of Nigeria Holdings, United Bank for Africa, Zenith Bank and Guaranty Trust Bank. Nigerian Breweries also lost about 3.5%, while we saw international breweries closing up by 0.5%. Now, for more on the space, I'm now being joined by Muyiwa Oni, his banking analyst at Stanbic IBTC Bank. Good morning, Muyiwa. Thank you so much. Now, of course, expectations ahead. On the one hand, we have the MPC rates decision today. On the other hand, for the equities markets directly, we have expectations for bank earnings and some other companies, but particularly bank earnings for investors who are keenly waiting, especially for that for Guaranty Trust Bank. Like, just give us your thoughts ahead of the opening bell with a focus on bank earnings.
Sure. Like you said, bank earnings has commenced, and Sterling Bank released its results last week. For this week, we're expecting a few banks to release results, and I'll say there are a few lines that we're looking at for the results. We'll be looking keenly at loan growth, and the reason why we are looking at that name was because going into the year, banks were a bit more aggressive with loans, and it was really more driven by the expectations that we'd see a likely collapse in net interest margins because of an expectation of declining yields in the fixed income space. That hasn't really happened, and so we could see banks slow down in loan growth, and that would be an interesting line to see. And even with NIMs as well, the expectation was that for the the mid-tier banks that have had challenges with cost of funding, an expectation of declining interest rates would have a more positive impact on their net interest margins, but interest rates haven't necessarily declined. So we'll see how these banks are able to drive down their cost of funds and keep net interest margins robust. And then also, I would say non-interest revenues as well is a key line we would be watching keenly, and it's really more because of the new guidelines on fees that resulted to some fee cuts, like the ATM fees that we won't see any longer. COTs was cut down. SMS fees was also cut down as well. So we'd like to see outlook on net non-interest revenues going into for Q2 and seeing what that would mean for the second half of the year. And if you use Sterling Bank's performance as an indicator, there we saw very strong loan growth. Loan growth was up 18%. Non-interest revenues was also quite robust, up around 70%. So if that is something to go by, which I might not necessarily use a direct indicator for the banks in general, but I expect but if we see a replication of that across the names that we cover, that would be quite positive.